go market price or whatever, and then if you stick to your strategy and then just let the emotion ride out, that's like definitely something that has helped me out.
Yeah, that's pretty cool. And you said emotion regulation, like, is that like an actual like practice that you can do, or is it just kind of like you against yourself, kind of like how Eric says it, um, where it's just you kind of have to learn to understand yourself?
It's a little bit of both, but the cool thing with sports psychology is that you can just make it very practical, and especially if you know what emotion you're struggling with. Um, so there's a bunch of theories, but I won't bother you with them. That's not that interesting. But basically, you need to find out like if you have recurring issues or something that happens a lot. Basically, you will just analyze it, but in the moment itself, like breath work and meditation is one of the staples that comes back in a lot of psychology, and it's basically about becoming aware of the emotion and just letting it be there, but not letting it take over control. And
Oh,
that's
okay.
just a little bit of practice, or a little bit. Well, it depends on what level you are yourself already, or if you have any issues or.
Hmm. And then, sorry, I'm just kind of going off on this. I think it's so interesting.
Oh yeah, ask anything you like, man.
Um, how, like, in your studies, it seems like you've got a pretty good handle on, just kind of like your emotions and sort of your own psychology. And have you noticed a difference? Maybe not a difference, but have you noticed like the struggles whenever it comes to trading, like maybe like different emotions you haven't quite yet experienced because it kind of ties in differently, or?
Um, so you're asking if because the training that I went through, trading is any different for me, or what
Um,
exactly do you mean?
you're right. I guess what I'm asking is, throughout your training and all of your studying, have you noticed anything maybe new or different when it comes to trading versus your just normal practices?
Nah, not really. I mean, um, I'm still human as well. I'm not some type of guru or anything.
Yeah.
So I still experience all of the emotions, and the only thing that with trading, I don't think I ever really traded with money that I really couldn't handle, but definitely if the amount increases, the emotion increases as well. Um, but it's not like there's any new emotions that I found out about when I started trading. So yeah,
Yeah.
not like that. I don't know if that's an answer to your question.
Yeah, I think that's spot on. It's just, it was interesting for me just because when I think you mentioned it maybe a few weeks ago that you were a psychologist, and it just kind of stirred those like questions in my head, and it was like, well, for whatever reason, just the idea that I had is, since that you kind of understood that part of the brain and that and how that affects people, just you know psychology in general, just
Mhm.
understanding your emotions. I wondered if just a day-to-day life, and dealing with emotions in your day-to-day life would be any different than trading and dealing with the emotions in trading, because I know, at least for me, um, when it comes to trading, I feel like there's more of a stress or anxious side of things than just in my day-to-day life. And I think that's just because it's, one, you're kind of battling out whether you're testing your hypothesis. You're trying to be right every time with when you're putting on these trades. And then obviously if you're trading real money, that stress aspect into it comes into effect with having to deal with the real money. So I was just curious to see.
Yeah, no, for sure. And like you're saying, like everyday life, you're not stressed out because there's not always something on the line. And the thing with emotion, I usually say like it's a type of thermometer, and it just lets you know what is important to you or what is of importance to you in a certain moment. So day to day life, if you're just sitting your behind your desk and not a whole lot of stuff is going on, then probably you're not gonna experience any strong emotions. But with trading, even if you trade with a little bit of money, well, of course it depends on your account side, and then it's relative. But yeah, it's definitely, well, I would be surprised if people wouldn't be more anxious or more on edge if they were trading with real money accounts, and yeah, that's just natural.
Yeah. So, all in all, how long have you been trading, and how has that been for you?
So it's actually been like the last year or even half year that I've been more actively trading. And previously, I worked at Apple, and that's why I was enrolled in the employee stock program, and I had a bunch of stocks of those. And I started selling them off like about a year ago, and now I only have 32 left. And with the all the other money that I made of those, because I started working in, I think, 2018 for a couple of years, and the stocks like make crazy moves upward since then. So
Oh yeah.
I definitely profited off of that. But now I hold a little bit of Apple, and I just want to start trading other stocks, and I haven't really gotten to that. Like one stock that I was eyeing is
Good
the
morning.
Oxy. Hi, good morning, man.
Hey, Peter.
Oh, I don't have sound. Hang on.
But besides that, my experience with actual trading is pretty limited. Well, a little bit of paper trading and stuff, and I like to see how stocks move during the day, but it's pretty limited so far.
Yeah. Do you have a lot of time during your day to kind of just sit and watch the markets? I know you said you don't day trade, but do you just kind of sit around, maybe not sit around, but just kind of watch the markets during the day?
Sometimes it depends because usually when the market's open, it's like 3:30 over here,
Mm-hmm.
and most of the time then I'm still at work, and I can't, be in a session with a client and just start watching the markets. Um,
That was funny.
yeah,
You just kind of
there
have to
have
get.
been times though, if it's like a quiet moment and the clients are out working and I don't have to do anything, then I'll really quickly check like pre-market moves, but that takes only a second and they don't notice, but definitely not like a whole bunch of setups and stuff. Um, so yeah, I don't really watch it, but I usually try to check in what the market does when it opens, and I that's another part with the psychology. I think it's so interesting how like the first hour, first 2 hours, the market moves really intensely, and then towards closing, there's some action sometimes as well. And of course, there are exceptions, but that's like the main takeaway or what I've seen so far from checking out the markets.
Yeah, I've always kind of noticed that too. How the first few hours, just right after open, it's kind of a mad rush to either get those orders placed from like the previous day, and just the amount of volume is so heavy in that area, and then it just kind of, I don't even want to say drops off, but it's just kind of a more stable level throughout the rest of the day. And then even that I think it's 11 Eastern, so it's noon for me and then 10 for West Coast. It's that kind of lunchtime period, and I've noticed that volume drops off kind of hard right there too, because it, for whatever reason, maybe people are actually out to lunch, and then at the end of the day, it's, spikes back up, because to me, I feel like that it's everybody's rushing in to place their orders at the end of the day.
Yeah,
So
you're talking about power hours. So if you go the first 10 minutes, so from 9:30 to 9:40 a.m. market time, basically you're better off just not trading. And then 9:30 to 10 a.m., you're looking for a trend continuation, right? And then from like 9:30 to sorry, at like the same sort of time frame, you're looking for gap reversals, right? Sorry, I'm just waking up. And then from 10 to 10:30, you're looking for reversals, divergence, anything like that. And then by 10:30, usually you'll start seeing your first reversal in the market, if that makes sense. So
Mm.
it's and then power hour is the last hour of the day, and a lot of big traders will actually trade right at the end of the day in the last 5-10 minutes. So sometimes if you're looking for a reversal, that's a good time to enter in.
That's I actually did not know that at all. I like that's interesting that the big traders they wait until the end of the day really to trade.
Yeah, a lot of trader like retail tends to go in the day, like in the mornings, right?
Mm-hmm.
So generally, what happens is the big like the hedge funds and everything, because they can trade in hours that we can't really, right?
Yeah.
So they take a lot of positions at the end of the day after seeing what's happened, and then they adjust. That's why you always see the big run up right at the very end, and
Mm-hmm.
plus when they close out after hours, all those positions start closing and filling, right? So you'll see those big moves. Happens a lot. Like a Friday afternoon, I don't usually trade Fridays personally, it's for day trading.
Mm.
But Friday afternoons, you'll find basically right at the very, very, very end of the day, you'll get a setup generally for the following week. So Monday, you're looking for follow through on that last Friday. But during Fridays, it's very deceptive trading because of options and expiries and everything. So
So taking
Which is
that.
nice.
Oh, sorry, Trey J.
Oh no, no, you're fine. Good.
Um, like taking that what you just said like on Fridays, usually for that next week you're looking for that continuation of the trend, so we can say that like this week coming into it we're looking for the continuation of that upwards move on Monday.
yeah, exactly. So and I mean, for the first 8 minutes of the day, I don't, or 8 to 10 minutes, right? I don't trade at all. I just watch and see what happens.
Mm-hmm.
And then usually, like I said, around 10:30, you get that first continuation, and you're looking for gaps and other little things in there. So it, there's a lot to it, right? It's not cut and dry, and obviously, it's not the same every time, but it is pretty standardized for day traders, I think.
That's
I don't
cool.
know how long you guys have traded for, but that's a huge thing. I've got it written down somewhere. I can try and find it and drop it in there.
Oh yeah, cool. Yeah, that's not something that I've known before. It's still I have so much to learn about everything.
It never ends. I've traded since God, I don't even know, '94 or something, and it's just not consistently, but
Well, I was
it's
two then.
yeah, and I'm still learning. Like even with options, I'm fairly new to. I'm only maybe 3-4 years in options now, but it's just there's so much, right? And then it changes too, so that doesn't help.
Yeah. So you've been trading mostly single stocks or
Yeah,
like
no,
futures?
I'm actually more of a value investor originally anyway. I do like lots of due diligence and everything, and then I got into day trading. I've done forex. I've done, I don't know, lots of stuff, I guess. But ultimately, most of my money's come from just sitting and holding in good buys. Honestly, as much as I hate to admit that.
Mm.
Yeah, just
So
buy
the
and hold.
Yeah, so I mean, the options aspect. I even though I watch a lot of this stuff, I pretty much am doing the wheel, covered calls in some accounts, depending on what I'm looking at, and the odd diagonal, but not a huge number of them. And I hardly do anything else. So I'm patient, right? I don't need to trade all the time, even though I do, but I tend to piss around trade. So I trade for fun in different accounts, and then I have sort of long hold accounts, right? So very, very, very separate because I've blown out two full accounts in my day already. So that sucks.
Yeah, that definitely sucks. I've done that myself, blown out an account, and it was it was fun to learn that side of me. Just kind of that it was just a whole lot of anger, real, or I wouldn't even say anger. I'd say frustration because like it's like why would I let myself do that? And then like right after that, it's like all right, well, I don't want to do this anymore, so I'm just gonna set this down and then walk away from it. And then it was like months later, I came back and I was like, okay, let's do this again. I can't.
Yeah, I mean, I had to rebuild. I keep about 10K in one account just for day trading and playing around. And I got caught naked on a call on GameStop actually a year and a half, 2 years ago, whenever that was.
Mm-hmm.
I was on the wrong side of that one and paid the price. And then I don't know, probably 10 years ago, maybe give or take, I was in a forex trade and it went sideways and blew up my account. Forex is nuts. The leverage there is ridiculous, right?
Hmm.
When
Yeah.
it moves, watch out.
Yeah, luckily I haven't blown any accounts. Only with sports betting, but that was not too serious, and not like large amounts by a long shot. And I definitely want to keep my track record of not blowing out an account.
I think
Yeah,
it's a rite of passage, right? You have once one time as a trader, you have to blow out your account.
it's emotionally like to this day I have emotional damage, right? Like I'm all messed up. I have fears of certain things happening, so I probably am too risk adverse in some cases now, which is just beatings from different things, right? Yeah, it's a double edged sword.
So, do any of you guys day trade? I know you said you do, Mark, or is it Mark?
Oh, Steve, you're talking to me? Yes, yeah, I
Oh,
do.
sorry, yeah.
Yeah, I still I dabble. Like if I tend to I'll snipe, like so if I see a really good opportunity, I'll jump in, throw a 2 to maybe a 10% position at most at it, and then just that. But I generally don't day trade on a consistent level. I just take the odd really good setup. Now I used to try every day, but I was over trading for a long time, right? I find with like what I've been doing lately, and it's not advice or anything, obviously, but what I'll do is, like Nvidia is a good example. I knew I wanted to build an Nvidia position, but I also figured that it's higher than my intrinsic value that I've got set with my discount rate and everything, right? So what I did is I entered in dollar cost averaged in, even though I had lots of money to buy the shares. As it was dropping, I was adding 10%, 5%, whatever, until I built up 100 shares, and now I'm basically wheeling it, right? So I've got a spread on it at this moment, but so just keep bringing the cost basis down, right? And I have say 100 shares. Actually, I can show you. I don't know where I should post it, but I've got 100 shares running, but then I'll buy an additional 20 when I see a really big dip and then resell it when it goes back up, that kind of thing, right? So I'm kind of swing trading it more than day trading it, but and then I'm playing options on it as well.
Yeah, check. Gotcha. And
Yeah.
so, I'm curious about you guys, like, for the general market trend, because last week we've been up a little bit again. But personally, I don't think that we're out of the downside just yet. But what markers do you use to check, and when do you prove yourself wrong, or when do you feel like you're? Because I know like it's always you're never really sure. Um, and I mean I could very well be wrong, but how do you guys check yourself or check your assumptions?
I think part of it is, like your indicators that you use, like your charting experience. And I think another part of it is like, like just confirming it with other people and trying to get different perspectives. Cause, like I know just looking at SPY right now, the two or EMAs that I'm looking at, exponential moving averages, they're starting to cross over with the gap up they had on Friday. So you could take that and say, oh well, that seems like it's moving in a bear or a bullish direction. And then you're looking at other stuff like the volume profile and trying to get data from that, and then taking all of those assumptions and saying, well, I think that it's moving in sort of a bullish direction and it could have, more bullish intent this coming week. And then, I post that in here and Shrey J or Steven or even you, you could have, a differing perspective just because of your indicators. And I think that's a pretty large part of, figuring out where everything's at.
I'm similar. I'm like right now, I use the weekly chart generally for my trend movement. So right now, if I'm looking at a weekly, we're not even at the 21 moving average, right? So, or exponential specifically. So I'll play to the moving averages and distances from it. So I don't really like, I stopped playing crossovers because I found I just didn't make money with them. But when the price overextends beyond, one of the main moving averages, the 50 specifically, I'll take that trade every time once I see a reversal in the trend, right? But I also watch a lot of macroeconomics, and I'm watching for binary events. So I don't like trading binaries if I can avoid them. So if I see an earnings come up in a specific stock, I'll tend to get out if I'm in a good position for it, or I'll set a stop depending on what it is. Options are a little different, but yeah. So I don't know. It's just specific to the play, but overall, I'm watching futures, the SPY, quite a few different things, I suppose. But I have canary indicators, and right now, yeah, I don't. I think we still got a fair amount to go down. Although I think we're probably going to still go up a couple more days here, and then we might just range over the summer. You got to remember, I don't know how long you guys have traded, but like the summer is doldrums, right? You just don't get the volume, so the moves tend to be smaller. So sometimes it's just slow, painful drops every day, right? You don't necessarily have these big moves all the time. I hate trading summer. It's boring. I used to just walk away, right? Just go do my yard work and shit, and come back and the fall basically. But
Yeah, there's an expression like for the summer. It's isn't it like sell in May and go away?
yeah, yeah.
Yeah.
But I mean, like anything, if you can do seasonality too, right? There are stocks that tend to run in the summers, and every month there's something, right?
So, Stephen, when you say weekly chart, do you mean weekly aggregation or 1 week, 1 day chart?
Well, I use TradingView, so I tend to zoom out quite a bit. I look at quarterly, monthly, weekly, daily. I'll actually, I wish I could post in here, but quarterly, monthly, weekly, daily, 8 hour, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, 3 minute, and 1 minute. So depending on what I'm trading, but yeah, for my main trends, I'm looking at weekly and monthly.
But the aggregation period is day, like each day for a week, or is it like 5 terms, or aggregation of weeks as one
Uh,
bar?
no, you see, with TradingView, you can just zoom in and out as you want. So I mean, right now
Oh, okay.
I'm looking at from 2009 to 2023, right? On a
Gotcha.
weekly. So yeah, and you're just it. I know in Thinkorswim it's a little bit different. So it's a multi-year chart anyway.
Right, right.
I find one thing I learned a long time ago is the more you zoom out, the clearer the picture is of what's going on. That's how I got killed in forex. I was busy being myopic in the 15-minute charts, right? 30-minute, 5 minute entries, and then kind of swinging back to the hourly and the daily. But I missed a major trend change on the weekly, and I didn't see it, right? And that was a big lesson for me. And I ever since then I've pretty much the weekly is kind of my it's my main guide for current direction in the midterm. I'll call it the next like couple months, and then the monthly is kind of my overall direction. So I'm watching, like, if you hit the bottom of a monthly candle, you better be wary that you could get a reversal, stuff like that, right? And it's not, you always have to remember, it's not the day traders here will know this, but it's not a candle being passed. Like, say you have a resistance level at 100 on stock X, right? You need to close outside of that resistance level. Like, if your candle's halfway through, like if I look at a daily chart of the SPY, for there. Yeah. So like a daily chart of the SPY, we're actually over the. You're over the 20 moving average a little bit, but in my mind, until that actually goes above, closes outside of it on a daily chart, then comes back and retests, that to me isn't a valid candle, right? And it's the same if you're looking at weekly charts and you're on a Thursday, that candle doesn't mean anything until the following, like the close on Friday, right?
Mhm.
And that's something to remember because I've been caught with that where I'm like, oh look, we had this huge move, and you're early morning on a Friday, and then all of a sudden, right at the end of the day, guess what? They take it in the other direction on you. So
Yeah,
that it invalidates all that. So yeah, I don't know, just minor shit, I guess. But I don't know if that answered the question.
it did. Yeah,
Yeah, I don't know. I like day trading. I tend to agree with Eric. I think it has a place, and there are a lot of good things about it, but there's some merit to just sitting and letting theta take place because you really, ultimately, you don't know what direction things are going. You never do, right? And the whole market is psychological. It's designed to extract money from people, in my mind. So
Yeah, it's the probably what the world's largest casino.
yeah, in a sense, I think you can put the odds in your favor. I don't know, like. I've traded fairly successfully, but like I said, a lot of my profits over the years have come from being very defensive whenever, like, at the end of I was almost out of the market for the last couple of years. I have very, very, very defensive positions. Eric always makes fun of me, but I mean, if you look at my portfolio, I'm basically right now gold, right? I'm food, you know, just things that aren't going anywhere regardless of situation. If we hit a major bottom and there's blood in the streets, and the big hedge funds are collapsing, and the real estate market is gone and everything else, that's when I deploy capital. I don't want to do it now. We're not even close to potential bottom, right? Or at least in my view.
yeah, I agree with
Yeah.
that.
Be right back.
This is like a little out of the blue, but did you guys hear about so with the whole GME situation, how what was it, Melvin Capital, I believe, um,
Yeah,
that were getting short squeezed. There was a recent, I don't think it was, it's not a law, but there was a recent change in policy when it came to trading. It happened on Friday. It was sort of went under the radar because of the big Roe v. Wade event happening. Um, that basically excused that hedge fund completely from having to pay or incur any sort of losses. I'm trying to find it, but I heard about it. I was
I know
having a
what you mean.
conversation about it.
Like, yeah, they got away scot-free, dude. Like completely, without having to pay their customers all the money they lost.
Which is
Totally, bro.
wild. Like how is that even possible?
The rules are different if you're rich.
Oh, that's
Wait,
weird.
I'm not completely following. So, a large company or whatever holding got short squeezed.
Yeah,
Yes.
so initially, so go ahead, Ty.
No, no, no. Take it over, man. You got it.
Yeah, so you remember that GME debacle that happened a couple of years ago when
Yeah,
everyone
it's still
rallied
going
like
on.
yeah, everyone rallied, like retail traders rallied to drive the stock up. This one hedge fund had like a really large short position on that GME stock,
Mhm.
and they got squeezed out completely, and they had to liquidate like they had to close down their firm for a while. They couldn't trade, but now the rules kind of let them get away without having to pay all the people money that they lost. So it's like it
Really?
was kind of yeah.
Jesus.
What's this for? I missed the. Sorry.
It's the Melvin Capital thing, the GME short squeeze.
Oh
Ty,
yeah, yeah.
yeah, Ty
Well, I
just bought
mean,
it. Go ahead. Sir.
what was that other one where they unwound all the hedge fund trades because some rich guy, that was fairly recent. well, I don't know, one of the big hedge funds basically made a massive play. I think it was a nickel, and then he got wiped out. So they reversed the entire day's trades.
Really? Oh
Yeah,
wow.
yeah. Like the
What?
rich aren't allowed to get poor.
Yeah,
Yeah.
I feel the more money is involved, the less like rules there are, or it seems like, oh yeah, I just got a couple of million or half a billion. Even like here in the Netherlands, we have some political stuff going on, and just these huge losses, and then just money seems to disappear into thin air. Like, oh yeah, no, we'll take on the debt. Like what?
Yeah, the Netherlands and a few other countries are interesting. Like if you look at, they always talk about how good the system is there and everything else. But I mean, all the debt is just in the private sector, hidden from the government. Like the government almost hides it. Same with Germany, right? I was watching what was that? Basically, an interview with that elf. What's his last name? Anyway, he was talking about that, and they were saying basically they're just using the banks and private companies to put all the debt into, so their economies look better than say Italy's, but ultimately a lot of them have the same number or same amount of debt, right? Netherlands, they were talking about Germany, Netherlands. Can't remember. There's a whack of them that he listed off.
Yeah, I mean, the Netherlands definitely doesn't have a like a clean track record when it comes to economics and like GDP, but um, compared to the more like southern Europe states and like Spain, Italy, Greece, I feel that like Germany, the Netherlands are more disciplined, but we don't always take accountability when something fails, and that's the thing that's kind of bothering me. Like, of course you can fuck up, but then just take the hit, and that doesn't always happen, or even like it rarely happens the way that I see it.
Yeah, I mean, I don't know. When I look at Europe, I think Europe's in a lot of trouble here personally. Japan, Europe, Korea. To me, I mean, I've been contemplating short. It's a little late on Japan, but going long U.S. dollar to Japan yen or whatever, right? But I think personally that the European Union could easily fail. What that looks like, I don't really know. I'm working through that one, but if the EU fails, I mean, if the euro goes, well, then that's especially with Russia putting all the pressure on Germany and Europe in general with the gas prices. Even if the war stops, I don't think that's going to end. They've kind of moved into a commodity-based system in Russia, and China's backing them. So they're putting a lot of pressure on the West in general, and Europe is a direct. There's a direct problem there. I think. How are you guys had a better gas supply though, didn't you? Pretty sure.
What do you mean gas supply?
Natural gas. So
Yeah, the Netherlands has natural gas up in the north in a province or a state called Groningen, but there's a lot of like political pushback because once they started drilling the gas, houses lost a lot of their foundation and cracks started showing up. So currently, it's very topped off in the natural supply, and we mostly get it from Russia. A little bit from Germany, and Germany gets it from Russia as well, and one of the few Nordic countries.
yeah, yeah, and that's see that like that has so much potential. Like when this fall comes around, it could get ugly in my mind. Especially with like Germany with shutting down all their nuclear power plants and everything. I mean, the lights could go off this winter, kind of thing, if they don't play ball with Russia, right? And then the
Mhm.
U.S. is talking about exporting, but you need to actually have LNG plants to be able to export natural gas, and they don't just get built overnight. So
Yeah, exactly. And I actually looked a little bit into this for the Netherlands like last week, and luckily we're not in that of a bad spot. But like 20-ish%, don't quote me on this. I would need to look up the article, but something like 20% is coming from Russia, so it's not that steep. But Germany, on the other hand, is definitely more fucked. I believe they have like 60% reliance on Russia right now.
yeah, and I mean, it's very interesting how this all plays out. I mean, what's the
So So,
Go
what
ahead,
do you
Trey.
guys think about nuclear being an option to combat all of this? Now that I heard Germany and even UK is investing a lot in building out nuclear power plants, but it's really long term, right? So it's like 20 years or something to get the reactor started. Looks like that.
I'm bullish nuclear, but I'm also wary. I mean, this isn't the first time I've seen nuclear being the latest greatest thing, and it's going to be make everybody rich and all that. To me, nuclear is just like a leveraged oil play almost. So if you look at the nuclear market right now, you have the spot price is like there's a few factors, but basically Sprott is buying up a lot of uranium, right? And then the spot price has been pretty low for a long time. But what's happening is because the spot price has been climbing up, and there's supposed to be shortages. China's been talking about bringing on and are bringing on a bunch of different plants. Japan is bringing back online a bunch of plants, and a lot of companies have been actually locking in for the first time in like a decade, locking in contracts and futures prices, right? So I think the outlook is pretty good, but you're one disaster away in nuclear to all bets are off, right? I mean, if you get another Chernobyl or something, it's going to be dead for the next decade. So I have money in it, but I'm wary of it because I've seen it get really spanked really quickly in the past.
Yeah, that makes sense.
But what else was going on there? I think that Yellow Cake Uranium had they were having. I think it was actually June. I haven't followed up on it, but they had something going on where they actually would have not enough production to produce all the uranium, so they'd have to buy off of the spot market just to be able to supply their basic contracts, right? So, a lot of things in play there.
Hmm.
But yeah, I'm buying CCJ. What else do I have? Denison Mines, I think it was. Yeah. Anyway, it's just small plays, like I said. So just kind of hedge your bets, right? If it goes really big and nuclear really takes off, it'll take some time. And if we get a recession first, I mean everything's going to go down anyway. So, and I think that's personally, I believe that's we're either going to see some sort of a major meltdown in the market, a combination of the meltdown in the market with a recession, like stagflation, that kind of thing. If inflation keeps running, it's going to be very interesting. We're almost following. If have you guys ever looked at Weimar Germany and like the Weimar inflation?
No,
I've heard about it in history class, but I never really looked into the like the exact economical side.
Oh, I'll tell you, if you want to do an interesting study, Weimar Germany, there's YouTube videos and everything on it, but just look up Weimar inflation on YouTube. And I'm not saying that's what's going to happen, but it's an example of what does happen if inflation runs. And I mean, look at all the countries that are having major issues. Like Greece, you're talking about is a perfect example. That's just inflation getting to the point where the country basically defaults, right? Well, as the U.S. dollar goes higher, that that exports inflation to other countries around the world, right? So in essence, their debt becomes more expensive, and at some point, a lot of countries will start to default. So you see your weaker links start to have major problems. So you can see it in Japan right now. Like if you look at the Japanese yen, the yen is just getting destroyed. Why? Because the inflation is there. They're net importers of natural gas and commodities, and at the same time, they have the highest debt level to GDP in the world, right? So basically, it's like having a credit card you can't afford the interest on, and then the rates go up in very simplified terms. That even the U.S. can no longer pay, like their tax receipts don't cover, or with a few other things, but they don't cover their actual interest rate, their interest payments anymore. So it's a bad analogy, but I always think of it as if you ran your credit card up and say you have $1 million on your credit card or whatever, million euros, and the interest payment is 5%. If you can only afford the interest payment, how do you ever pay down the capital, right?
Mm.
So a lot of countries in that position, the only thing is they can adjust their own credit limit, so they can just keep expanding it. But that doesn't change that you can't afford to pay for it.
No, I think I haven't checked it in for the US in a while, but I remember that there was like trillions and trillions of debt that the US has or had.
Yeah, I watched. I think it was around 130%, and then with all the money printing and everything they did, they brought it down like 6 or 7%, I think. So, but anything over 100% is basically, you're you're in deep shit, and that's why a lot of people are saying, and I believe that they're intentionally letting inflation run. But the problem is inflation can build and escalate, and they tend to lose control over it. And I don't think, if you look at real rates versus nominal rates, and stop me if I'm talking too much here, but if you look at, say, like the nominal rate of inflation is probably what, around 8% right now, but the real rate, the rule of thumb, is double that. So if you figure that you've got an actual 16% inflation in the economy, uh, that's 16% of your purchasing power lost every year over that it sits there. That's huge, right? So in terms of interest rates, like they always talk about Volcker as a hero, but you need to. The interest rates were 18% on my first house, right? you know, like like
Yeah.
don't underestimate what 18% on. Say you bought a house in the States and you paid $1 million. Well, you know, can you even afford the interest on that payment? And people just, the housing market crashed. People went, well, I don't even have enough equity in my house. Why would I bother paying for it? I'm just paying interest on something that I lose money on. Yeah,
Yeah, and I
it's. Oh, go
think
ahead. Sorry.
yeah, I think that inflation is definitely interesting, like you talked about earlier, with the potential. I forgot the word in English, but basically the economy going to shit. Um, One thing that I find interesting is that right now stocks are upping a little bit, but the inflation is definitely coming through, and I think that buying power will be affected eventually, but it doesn't seem to be taken into account into stocks right now because like sales are up and numbers are up, profits are up, but people can't just keep buying money if everything keeps getting more expensive.
Well, and I think that's what we're seeing right now. I think what you're getting like inflation isn't a one of, right. If you look at history, it spikes and then you get like a deflationary run and then it spikes again because there are lagging indicators in there. If everybody, a good example was like wage push inflation, right. So if the cost of living gets to be too expensive, the unions start fighting the companies and they increase, say, their wages. Well, that puts more money supply in the system, and if you put more money in supply in the system chasing the same number of goods, you devalue your dollar, right. So basically what you're seeing is a situation where that devaluation tends to build. So as they got their raise, right, it puts more money in the system, and then because of that, the companies have to raise their prices. Well, if they have to raise their prices, guess what? I mean,
And
the
they're
cost
not
of
gonna
living gets
take
more
it
expensive.
themselves.
Yeah, and that's what happened in Weimar. Like if you look at Weimar Germany, it's kind of pre World War Two, one. I think it was 1920s, but at the time, Germany was killing it. The world was in a Great Depression, right? And the Weimar was going through the roof because everybody was using it as a safe currency, and they were just printing money, right? And so to pay for everything, and then when it crashed, it got to the point where like the inflation got. I think hyperinflation is defined as a 50% gain, like loss in purchasing power per month or something along that lines. So think about that. If you buy a loaf of bread today, right, for $1, and then by the end of this month, that same loaf of bread is $2, and then by the next month, that is $3. You know what I mean? Like,
Yeah.
or 350, I guess it would be. But so what happened is it got to the point where people were actually burning money in wheelbarrows because it was cheaper than buying coal.
That's insane.
Yeah, and so they defaulted, and then there's an argument to be made that that's part of why they ended up in World War II. I think I'm losing track of my dates, but anyway, yeah. So it's really, I mean, if you look at it, and it is unbelievable and it's happened. It's not just there, right? It sounds like it's a one-time thing, but you could argue that Rome fell the same way. You could argue that Greece fell in a similar way. Zimbabwe is a good example. Venezuela is going through inflation right now. It happens all the time, but everybody seems to think that the West is immune, but we're making the same mistakes as they were. So I don't know.
So I actually pulled up the Weimar hyperinflation chart. Like just found it on Wikipedia, but I'm trying to drop it in here
I don't
because
think you can drop in voice rooms, but we could probably pick a different one.
Yeah, you can share your screen though, I think.
Oh yeah, that works. Sure.
oh, okay, yeah, I could do that as well. Um, yeah, let me pull it up. Okay, so it is this one right here. Oh, where'd it go? Hold up. Okay, can you guys see this?
Yeah.
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 Okay, yeah, it paused on mine, so I can't see it. But yeah, like the way you were saying it, so it's like 1922, like ish, right here is at 10,000, and then moving into 23, it's over 1 trillion.
And yeah, and so put that into perspective. I mean, so let's just say for an easy number, just looking at the chart there, something was $10 in 1920, right? Well, by 1923, that same item was a million. So picture something now that's $10, and then a few years later, it's a million. You
Mhm.
bought a toaster, and it's $1 million.
Oh god, is that is that kind of the same, at least like concept, the way it works in kind of like Japan or China, how um, things seem to cost, like 10,000 yen. Is am I thinking kind of along the same lines as that? I mean, not necessarily that it costs $1 million because of hyperinflation, but it's just their currency is valued that way, or is it?
Yeah, I think it's more the currencies are valued that way. It's the purchasing power of that amount. I mean,
Mm,
so uh, it's really how much your currency, and so I define in my mind, I define money as gold, and I'm a gold bug, so I'm biased, but and I tend to define currency as a means of trading money, if that makes sense. So it's the value of your currency versus a real items, right? So I looked at that. I look at that priced in gold a lot, which is just a website that you can check, and it basically just shows you. What your currency is relative to gold, which tends to be fixed, right, or fairly fixed. Now, there's all sorts of manipulation and everything else in there, but ultimately, real purchasing power. Like if you look at oil versus gold, oil hasn't really moved much. So why is it more expensive in currency terms? Because you've devalued your currency, right? If you even go back to Roman times, an ounce of gold would buy you a nice toga. To this day, an ounce of gold would buy you a really nice suit. It hasn't changed, right? Whereas the currencies, we've been through hundreds of them.
gotcha.
So
Have you read that book about the Austrian economics? I think you're in line with that. Forget what it's called. I think it's by Murray Rothbard.
no, no, I haven't. Is it based on uh,
It's
like
tying,
premises or?
no, similar to what you're just talking about, like tying gold